Well, there have been positive reactions on stock markets in Asia and Europe as the price of oil dipped below 84 US dollars. But what does the agreement mean for energy supply and movement? Russ Mould is the investment director at AJ Bell in London and joins me now. Russ, good to have you back on the program.
Good day, Girish.
Now, Trump's words, ships of the world, start your engines, let the oil flow. So, Russ, will it flow as it did pre-war in a short space of time?
Financial markets certainly seem very hopeful of that, given that the oil price is back down to $83 a barrel on the Brent crude measure, but that's still above 70 where it was before the war began. So there are some lingering doubts. Iran still has to clear the mines. Ships have to get into position. They have to load, ship, unload. And also there is still lasting damage to some potential refining and liquefied natural gas facilities in the Middle East. So there are still some questions to be asked. But financial markets, as they have since the 8th of April ceasefire, sticking to their view that the worst is past and that some normalisation of supply will commence at some stage in the next 12 months.
And what about the normalization of the price of oil? You mentioned that, that $70 figure there we've seen for the months before the war. Do you expect it to get down to that level as well? Are those realistic expectations?
It's a good question. If you look at futures markets, not oil for delivery now or in a month's time, but in, say, 12 or 24 months' time, then the price is 73 to 75 US dollars a barrel. So not quite back to where we were, which again perhaps reflects those lingering doubts over whether the deal holds. There are still some volatile elements there, such as Israel's plans, although it's got its own election to think about in a few months' time. So the markets aren't completely convinced, but thus far they feel confident enough to stick to the core view they've held again since April, that escalation of military action is over, de-escalation is upon us, and that there will be a lasting peace deal at some stage.
Yes, and then would the market sort of be boosted as well, perhaps by expectations that there might be exports out of Iran as well? That is a major producer of oil.
The Americans do seem happy at the moment to let Iran sell its products again and raise valuable revenues. Some countries like India and China have been shipping in product from Russia, so haven't been as badly affected. Intriguingly, that may be reflected in how their stock markets are up today, but not as much as the really big importers of Middle Eastern oil, like, say, Japan or, like, say, South Korea. But yeah, that is certainly an expectation, and it should, if permitted and happens on time, take some pressure off the oil market and, again, allow the markets to go back to thinking about other things, like losing their marbles about artificial intelligence companies, which they seem very happy to do at the moment.
Yeah, at the moment, indeed. But tell us, from what you see in the major stock markets, and particularly Asia and Europe, are investors 100% confident about a genuine permanent end to hostilities between the US and Iran?
The US stock market is at an all-time high. You've seen markets like Japan, Korea at all-time highs. The UK is within a couple of percentage points. And so far in the first half of this year, despite everything in the Middle East, we have seen really, really strong corporate profit numbers, really, really strong corporate dividend payments. So you haven't yet seen any major impact in that respect. So I guess markets are hoping, thinking, expecting that they've got enough space for company profits to stay strong, cash flows to stay strong, and withstand any further temporary short-term fluctuations in oil supply.
Yes, and on that note, the flow of oil, that is incumbent upon that US naval blockade ending and the reopening of the Strait of Hormuz. But has the global shipping industry sort of been permanently shaken by the events of the past few months, given, and as you mentioned as well, Iran has the ability to continue to lay mines, and there are mines there in that waterway?
You do need the peace talks to hold, and you do need progress. And America hasn't got the unconditional surrender that it said it was looking for at the very start of this war. But it does, in theory, have scope to get the deal that it wanted, which was to stop Iranian nuclear weapon development, which was the core aim. So Americans will say that this is job done. But yeah, if I was an insurance company, I would still be charging a higher premium than I was beforehand for a ship going through the Middle East. And if I was a ship owner, I'd be expecting to pay it or looking for alternative routes. Over time, we are seeing new pipelines being laid, new ports being prepared, new routes being developed. So given time, human ingenuity will find a way around these things. So maybe in the very long run, there isn't as much oil going through the Straits of Hormuz as there would have been beforehand. But right now, it is still a choke point, and we will need to see that start to flow relatively quickly before oil traders and financial investors start to get a little bit nervous.
And of course, the biggest impact, has been on energy supply and inflation, depending on which country you are from. But for those, that are more vulnerable, the most vulnerable nations to these oil supply shocks, can residents there expect costs to come down and supply to increase anytime soon?
I mean, oil shocks have got a nasty habit of leading to sustained increases in inflation. So policymakers, politicians, consumers will all be watching this very closely, hoping that again we get a deal and that gives some scope for oil prices to come down and prices at the petrol pump to come down. Again, those markets where they're probably most exposed to imports, Japan, Korea, or subsidies, Philippines, Indonesia, they've seen some of the biggest increases in stock markets recently. So again, suggest that the belief is there is relief coming. We'll see whether they're right.
Yeah, and lots of sets of numbers to look at in the weeks and months to come. Russ Mould, really appreciate your insights there from London. Thank you so much.